What's up, my friends? Good afternoon to you here on a Wednesday. Happy hump day. Fed raises rates today by 0.5 percentage point. It's the biggest hike in 2 decades, which just shows you that they prefer to do 0.25% at a time. They never really want to rock the boat, if you will. Well, we've rocked the boat, okay? Inflation is really bad. We are in stagflation right now. I just got the call today. I'll be doing national TV tomorrow. So I'll be on One American News tomorrow evening. And we're going to talk about inflation. Hopefully we'll get some real estate stuff in there, economy, some personal finance stuff, I think, as well. They're looking at this time. So we'll see. So we'll be on the TV tomorrow night. And today, just want to kind of go over what happened here and how could this be? Because see, unfortunately, the message that's going to go out, the message that's going to be received by the average home buyer, home seller from this particular action by the Fed is that rates were raised today. The rates went up. And while it's true rates have been going up, mortgage rates have been going up, we've been chronicling this for quite some time. Get disclosures out of the way here. Derrick Evans, NMLS 155010. I'm a VA home loan specialist. Call, text me if you want to buy or refi. You can send me an email as well. Let me get this stuff out of here. And let's take a look. So how do we gain 61 bips? I mean, look at this huge green candle over here. Now, remember what we were talking about. I was talking about how, when we do get to the point of a bottom, it's going to kind of look like that. And then, of course, since I said that, but we're back into the range now here at 101.81 on this 4.5% Fannie Mae coupon. So that makes me feel a little bit better, even though you can still see inside the range it's really leaning to the downside. Mortgage bonds just very, very heavy right here. Hard to justify buying them. But I'll tell you what, with the 10-year, look at this, 10 years, almost 3%. Listen, it starts to get to a point where it gets pretty attractive, right, to go for the 3% with no risk, or essentially no risk. It starts to get pretty attractive. A lot of people have cash, and that could explain some of the exits from stocks recently, just rates being higher, people wanting to park cash. Hey, buy the 10-year, get 3%. Sit on your hands. So that's the reason why we're looking at rates and going, well, gosh, these 4.5% bonds, at some point here in the near future, and maybe it's not at 4.5%, maybe it's 5.5%, maybe it's 6.5%. But at some point here, this has got to level off because it just becomes too sexy to park cash for that kind of return. Me personally, I wish I didn't have to be an investor. It's scary. You lose money sometimes. It sucks. You're always, you're exposed. It's how it feels when you're investing. When you're investing in whatever, except for real estate. Real estate's probably the thing you feel the least exposed investing in. But stocks, cryptocurrencies, also you feel very exposed. And when you just put your money in savings, remember back in the day, like our grandparents, they were able to put money into savings accounts that were making 12%. You don't have to take any risk. You just have to save money. That's it. And this generation doesn't have that. The banks have basically given us the huge middle finger.
Hated it.
And it's up to us to figure out how we're going to make money. We just have to be exposed at all times. We have to be levered at all times. We have to be invested at all times. If you start to get to a point where you can get 3%, guaranteed, and not have to do anything, we're there. I mean, the 10 years are 2.95. So you can get 2.95% right now. That's for some people that they're going to say, you know what? I'll take my risk off the table. Let me sell these cryptos. Let me sell these stocks. Let me just get 3%. I'm good. And then there's some people who won't do that until it's at 4, and some who won't do that until it's at 5. But at some point, everybody's going to get to that point, right? I mean, if the 10-year was at 10%, everybody would be in that boat, right? So at some point, there's a breaking point. Are we there yet? I don't think we are, but we have to admit the fact that it's possible. We got 61 bips today, so rates dropped today. Rates dropped about 1/8% to 1/4% today across the board. Not as huge as you would expect, but a lot of this was expected and priced in. Everyone knew that the Fed was going to raise 50 bips. They said so, and we believed them. Now, if they'd done something less or more, then it would have caused problems, but they're moving this up in line with expectations. In addition, and this is where This is the reason why I believe that we're not done with rates going higher. And today, and any kind of rallies like today where we have these spikes higher in bonds, these are lock opportunities, guys. Take advantage of these. Lock it up. Pull the trigger. Make it happen. If you can, get in there. Because this is usually, so far, when we've gotten these big candles, those were the times to go ahead and get in. Go ahead and get locked in. And the reason is because this central bank outlined a program in which it will eventually reduce its bond holdings by $95 billion a month. In other words, they're going to become a seller, which means right now, this huge seller, this whale, the Federal Reserve, who owns probably more bonds than any entity, is going to start selling them at a massive clip of almost $100 billion a month. And that can only send these one direction, folks. And as much as I hate it,
it is your destiny.
There's almost no way we don't see higher mortgage rates and these prices going just way down. It's just there's no way it doesn't happen. I know it's possible. It's possible, but it's just too big of a seller, And although we've been outlining the fact that it's possible we could be rounding off, I've been saying I don't think so. This is the reason why. Just have too big of a seller that hasn't come to the market yet. So the rate move is the largest since 2000, but really, they like to do quarter point, 50 basis points, not much difference. Fed Chairman Powell underlined the commitment to bringing inflation down, but indicated that raising rates by 75 basis points this time is not something the committee is actively considering. So they still want to keep taking baby steps. This is like trying to put a fire out with a water gun. Guys, get the freaking hose out. Raise it by a point, and then a point, and then a point. Do what you need to do. Do what you need to do. And that is basically throw everything we can at inflation, because inflation is bad. Stagflation, which we've talked about a little bit, it's here, right? GDP, let's see here. GDP, let me get this zoomed in for you a little bit better. Q4, plus 6.9%, extremely healthy. Q1, negative 1%. So stagflation, basically, by definition, is, defined as a period of inflation with a decline in GDP. Well, that's what we've got. Not only do we have a decline and then the fact that it's negative, but from the previous quarter, we're down here 8.3% GDP. So it looks like we gave up quite a bit. Now, if you just average the two, say, okay, well, really it's 5.5 to 2.7, let's say 2.75, 2.7875, whatever it is. That is really the average for the last two quarters. Let's wait one more quarter and see, does it bounce back? We haven't had a lot of negative GDPs. Really haven't. Q1 2020, which is COVID. Q2, which is COVID, then the recovery, which happened very quickly with COVID. And it's been positive since. This is the first one where we're really starting to see stagflation here, where the higher prices have actually started to impact people's willingness to transact. There's other forces here, certainly what's going on in Ukraine is a part of this too. But we are in stagflation. We have stagflation right now. We're in it. We're living it. The question is, when will this impact the labor market? Because we have a labor market where there's a lot of jobs available. People who are switching jobs are getting crazy bonuses and perk packages, and things are just really, really, really solid and strong on that front. But here we are with stagflation, with prices going up, with rates going up. When is something going to give? So the challenge with stagflation is that at some point, there's sort of a bursting of a bubble. There's sort of a capitulation moment where everything falls off a cliff, because when you have inflation going on and you have growth going on, the inflation is really camouflaged by the growth. When the growth stops, now there's no camouflage, and it's revealed like, oh, damn, prices are way too high. But if everyone's business metrics are cast off of those current high prices, it causes problems when buyers are only willing to pay half or whatever. And so that's the problem that could trickle down into the labor market, and that is what a big risk is right here. And that's what we need to pay close attention to. So these things will happen very slowly, very deliberately. We're going to keep an eye on all these things, of course. So for now, what we're really looking to see is what is the bounce back tomorrow. Serious manipulation in the market today and yesterday, and really just right now overall, there's tons of manipulation going on. When you see everything trading in the same direction on the same day, guys, manipulation. So we have, remember the other day, I think it was 1 or 2 videos ago, where I was like, man, everything was down today. Makes no sense. Today, everything's up. So it's the same thing. It's a recoil. So we just kind of have to see what are they going to do tomorrow after the dust is totally settled from the Fed. Do we have another update tomorrow? Does this have legs to it? Or is this like a bear market rally type situation? One of the things that I've been looking at closely, this is Bitcoin here. I've been following the dollar, which is the DXY. I don't typically look at this a whole lot, but I was noticing some guys I follow who do a lot of TA were like, hey, it's double topping. And you can see right here, that's exactly what's happening. And this is from back in 2017. That was a high for the DXY, which got just under 104. And then here recently again, right at 104. Now, the last time we even got close to this, as you can see, there was a massive deflationary pressure. Or that's inflationary pressure. Sorry, the weakening of the dollar, this going down. That's inflationary pressure. Now we've had all this deflationary pressure, and that makes no sense. So what's going on? How could the dollar be getting stronger here? I've been trying to figure this out. That's why I haven't talked about it, because I really haven't been able to understand this yet. But we finally we peeled off of this resistance level here finally, and I think we're probably headed at least down to this trend line, if not further. But that will cause strength in everything that is priced in dollars, like Bitcoin, cryptos in general. A lot of people predicting a big crypto season could come of this, and it's possible. But we will soon find out. But the real question is, why is this happening? I mean, according to this graph with the DXY, according to this, your dollars in the last 1 year have gone up like 14 or 15%. But you tell me, has your purchasing power gone up by 14 or 15%? Has it? It hasn't, because there's massive inflation going on. So how could the dollar be strengthening? Well, when you're looking at something that's a currency, and I'm not an expert on this, but when you're looking at currencies, they are measured against other currencies. When you look at something like the DXY, it's a dollar measured against all other currencies combined, essentially. So what we're really seeing is significant weakening and significant inflation against the other currencies as a whole compared to the dollar. So even though we think we have it really, really bad here, my point is that it's much, much worse everywhere else. And that's why the dollar is strengthening, even though its purchasing power is decreasing here. Its purchasing power elsewhere might be increasing. I wouldn't know. I don't buy stuff in Spain or Portugal or whatever. So, that is what, there's something very macro going on there that has probably got to unwind. As soon as you can see the parabolic move here, he had a pretty normal trend line, and then, it cascaded higher here and then cascaded even higher here. So you're seeing this upward cascade going on with these trend lines. Usually that means that something has gone a little bit too far, and it's due for a pullback, which is what's happening now. So this is another thing I'm going to keep a very close eye on, just because I want to try to figure this out. But as of right now, it looks like the dollar is probably going to weaken some here, and that should cause cryptocurrencies to go higher. As we're seeing Bitcoin, Ethereum up 5% today. We're still inside this channel here on the lower end of the midterm channel. There is some resistance at this blue level here. There's a little downtrend there that's been respected a couple times. The green is the macro uptrend. So there's a lot of support in the near lower areas for Bitcoin. And I do expect to see Bitcoin do well through the rest of 2022, just based on the fact that, there's so many things that could have gone on. There were so many opportunities for Bitcoin to really, really sell off, and it just didn't. Not to mention also whale holdings have been increasing pretty significantly I retweet these when I see them. I follow this guy, Crypto Whale, who tracks all the on-chain stuff, and there's been absolutely gigantic amounts of Bitcoin coming off exchanges, okay? And when Bitcoin comes off exchanges, that means that the whales have bought the Bitcoin that they want, and they take them off the exchange and they go put it into their wallets or into cold storage. When you see money coming onto exchanges like USDT or whatever, then you're seeing whales bringing on money to then purchase crypto with it. When you see the crypto coming off the exchange, that means they've already got it. And we've been seeing thousands and thousands and thousands. I think yesterday was a net 15,000 Bitcoins were taken off of exchanges yesterday. And the number keeps growing. There's so few Bitcoin actually out in circulation right now that's tradable. And the whales keep accumulating and keep bringing it off the exchanges. So I feel like that right there, coupled with this TA right here, means Bitcoin's probably going higher in the near future. But that said, I will digress on that and focus here on mortgage rates. Lock your loans today if you can. I've posted some stuff recently. Jumbo loans look amazing. Rates are incredible for ARMs. There's a bunch of different ARM products that are really, really good right now. Most important thing, buyers, there's an opportunity in the market right now for buyers where the market is not necessarily softening, but there's more opportunity. There's less offers on properties. There's a lot of people who are kind of in sit and wait mode. There's a lot of people who have already signed a 12-month lease and have exited the market. There's an opportunity for buyers here to kind of step in and test the waters. I would suggest doing that. And if you do get the opportunity to lock on a day like this, do it. But we're still in a lock immediately mode for everybody. Everybody. Lock immediately. We can always flip to another bank later if rates improve, but get locked in right away. And let me know if I can help you in any way. Guys, have a great night, and I will talk to you again soon.